you want to be able to question them. You can't just take their word as gospel. Who is responsible of a failing or a thriving business? I know people are going to hate to hear that. Wrong. This is wrong. Absolutely wrong. Every single person listening to this podcast, 99% of the time, it's going to be an income issue. So let's focus on your income first. You know, I made too much money. You don't have a tax problem. You've got an income issue. And I say that with respect. Tax, tax, tax. I get taxed too much. My accountant stung me. I had an unexpected tax bill. I'm just going to work for cash. That way it's easier. Today we're going to be talking about tax and money. Two subjects that a lot of people feel very uncomfortable talking about. And I don't know why, because, you know, making money and paying tax, that's what we do every day. Like we need to do it. Like tax is expected. So having ATO debt is not. We're going to be going through today the tax system, how it works. Can we trust accountants? Can we not? What can we trust them with? And all of that stuff. And how to stay on top of making money and, of course, your tax situations. And, of course, disclaimer, this is not financial advice. I'll throw that in there. So too often I hear people say, oh, but the accountant has advised me this. And the accountant told me that I made too much money. I'm going to hold up on that. If my accountant ever came to me and said I made too much money, that person would be out of a job. There is no such thing of making too much money. Even if you're in the highest tax bracket, it is still better to keep that extra 53 cents on the dollar. But we're going to be going through, is there better ways to do things and all of that on today's pod. So first things first, with accountants, we do not want to be trusting their everything when it comes to, of course, business and tax. We as the business owner must understand how tax works, what we need to pay, because then you can pull up on them. You can be like, I don't think that's right. Or if you've got a trust structure and you're doing distribution, you can question them and be like, well, wouldn't it be better to do it this way and whatnot and carry losses forward and all of that? So I know you guys probably don't want to hear it, but yes, you must know the tax code as well. Not to the degree, of course, of an accountant. That's what accountants are for, but you want to be able to question them. You can't just take their word as gospel. So let's talk about the tax system, super, and how that all works. Now, starting with, first of all, let's be real. Everyone pays tax. Too often people are like, oh, but the billionaires don't pay tax, or employers don't pay tax, or you're a business owner, you're lucky because you can claim everything on tax. Employees pay the most tax. Is this true? Wrong. This is wrong. Absolutely wrong. In fact, business owners pay the most tax. I'm very, very surprised of how many smart people get conned into this belief system of money is evil, the billionaires are evil, millionaires are evil, employers are evil, business owners are evil, making money is evil. This is wrong. Making money is a good thing. Why? Because that way you can support your family. You can buy houses. You can then have an investment journey. You can then support your future generations. If you have a daughter and she wants to get married one day and you want to have that honor of buying her that wedding dress, that comes from money. Right? So we have to be comfortable with making money and be comfortable with making it as it is a good thing. And it's there to serve you and your family. And whatever you want in life comes from money. What we'll also mention on that is a lot of people are like, employees get taxed less. So if you're getting income tax gets taxed the exact same way. If you're an employee, an employer, the only time where it changes, which it doesn't change, is if you're doing investing through company and trust structures where you can move money around. Income gets taxed as income. If you're doing investing through companies, well, that's different because you can't actually essentially enjoy that money because it's not income. So you can't enjoy that money. That's in a company. So just put my hand gestures real quick. Your income gets taxed as income. That's my left hand. Then if you're doing investing, well, that's through a separate, you can also invest through obviously your income and your personal. But if you're doing investing through a company, well, that's tied up here. As soon as you move it from your company, which is this hand here, as soon as you move it from this hand to this hand, you have to pay tax on it. So I hope that makes sense. Everyone gets taxed the same way. All the clever people that are doing things through companies. And just so I can really spell it out, before you can do any cool stuff, investing through trust structures, buying real estate, buying shares, building other businesses, all of that stuff, before you can do any of that stuff, before you actually have a tax issue. Because a lot of people say to me, oh, Spiro, I paid too much tax. And then I go to them, okay, well, what's your taxable income? And then they'll be like, oh, I don't know, but I paid this much. And you don't have a tax problem. You've got an income issue. And I say that with respect, because if you're not in the highest tax bracket where you're paying 47 cents on the dollar, you do not have a tax issue. You have an income issue. So before you start saying, oh, I'm going to change my accountant's an idiot, my accountant's stuffing me around, messing me around, and I can't trust him, and I pay too much tax. Before you say that to yourself, say to yourself, do you have an income issue or do you actually have a tax issue? Really, really important, because 99% of people have an income issue. And if you have an income issue, let's focus on getting the business profitable first, where you do have predictable income, where you are in the highest tax bracket. Because if you're running your own business and you're looking to sell one day and you can't pay yourself a salary as a director of, say, $200,000, and that might scare people or whatever, it should scare people if you can't pay yourself $200,000, at least as a director of a business, an electrical business as well, the superior trade, you're doing it wrong. And if you can't pay yourself that salary, with respect, you won't be able to sell that business, because the strategic buyer that's looking to buy your business goes, well, how much would it cost me to replace your position as a director that's running, doing operations, running the business, doing everything? How much would it cost me to pay an employee to fill your position? If you can't pay yourself, well, how can I pay myself that? How can I increase my income to pay myself that? So yeah, I hope that didn't sound too awkward, but super important to pay yourself as a director, because if you ain't making money, your business isn't worth anything. And yeah, anyway, moving on from that. Do you have an income issue or a tax issue? 99% of the time, it's going to be an income issue. So let's focus on your income first. Then we can do all the other cool stuff with investing in companies and bucket companies and trust structures and real estate. Even just doing personal real estate stuff. Guys, get your income right first. Think of it like this. Could you buy a better property when you started your business, when you had no idea and you're barely making any money and you're fishing for work and everything was just a headache and you didn't have anything predictable and you're just drawing as you saw fit, like from your bank account? Or could you buy a better property now that you've learned business, you know how to get predictable leads, predictable sales, predictable profits, and you actually have predictable income to service a mortgage that you actually want to live in? I think it's gonna be pretty easy. Just fix the business first, get your income right, then look at either scaling the business to where your goals see fit, and then get that income cranking. So in Australia, we've got a marginal tax rate, which means we get taxed with thresholds. So for instance, from 0 to 18,200, your first 0 to $18,200, you pay zero tax on that. Then from $18,201 to $45,000, you pay 19% tax. You don't pay 19% tax from 0 to 45,000. You pay 19% tax from $18,201 to $45,000. That's your first 19%. Your next one is your $45,001 to $120,000. That is taxed at 32.5%. The next threshold is from $120,000 to $180,000, where you get taxed at 37%. And then from $180,000 and $1, you get taxed at 45 cents on the dollar. Now, keep in mind, with all of these, there's a 2% circa Medicare levy as well. So realistically, for every dollar upwards of 180, let's just make it easy, guys. For every dollar upwards of $180,000, you get taxed essentially at 47 cents on the dollar. That's a lot of money. So just under 50%. So every dollar upwards of $180,000, you're getting taxed at just under half. Now, let's talk about the tax system. Do I think it is too much, and do we get taxed too much? Absolutely. And the reason for that is is because in America, they've got an index system. So that means as inflation goes up, the tax system also changes with it. That's fair, very fair. Whereas in Australia, let's say for instance, you made $180,000 20 years ago. If you made $180,000 20 years ago, you would be balling. Like you would have everything. You would have multiple properties. You would have a beautiful area. You would have the boat. You would have absolutely everything you want. It would be marvelous. $180,000 in this era, in this time, it's not going to buy you a whole lot more thanks to inflation. And then you got to ask yourself, so should it be indexed? Absolutely. Does it look like it's going to get indexed? Not anytime soon. So that is the parameters we've been dealt with. Now, at the end of the day, you can complain about it or you can learn the system and take ownership of it and take action for your own life. So I would love it to be indexed. I'm going to carry out my life as in if it's not going to get indexed. So this is what too many electricians think. If I pay myself a wage of $180,000, 47 cents goes on the dollar, so $84,600 gets taxed, and I'm left from $180,000. I'm going to be left with $95,400. That is what people think. But in reality, if you pay yourself $180,000 a year as a salary, you would pay $55,267 in tax, leaving you with $124,733. And that is how you get your combined taxable income rate, your actual taxable rate as a total. So it's not 47 cents on the dollar. That is not your rate. For every dollar upwards of that is taxed at 47 cents on the dollar. Let's talk about ATO debt, because I am puzzled with how many electricians have ATO and have tax debt. May I just suggest, or let me throw it out to the audience. Let me throw it out to you guys. If you have ATO debt, is that a failed business or a thriving business? I'll repeat that. If you have ATO debt, is that a sign of a failed business or a thriving business? Who is responsible of a failing or a thriving business? I know people are going to hate to hear that, but I just want to be real with people, because in this economy, I'm very passionate about helping electricians. In this economy, you cannot afford to be average. I'm going to be brutal Spiro for a second. I'm going to be brutal Spiro. Was it the accountant's fault? Who's running the business, the accountant or you? Who's in charge of paying tax? You're the accountant. Who's in charge of cash flow? You're the accountant. Who's in charge of having a separate account with tax in there? Is tax expected to pay? Absolutely. So why are we so surprised when we get a tax bill? Oh, I had an unexpected tax bill. Was it unexpected or was it expected? Pretty sure it was expected. The beautiful thing is, if you do have tax debt, there are solutions. But doing what you've always done, you'll get what you've always gotten. So what do I mean by that? You got to change your strategy. Your strategy ain't working. If you got ATO debt, your strategy ain't working, and it's not going to change. If you've got ATO debt, you're charging low amounts, you're getting unpaid variations, you're working for the wrong clients, that's not going to change. You have to change it. And the beautiful thing is, we've had a lot of people that have come to us and say, Spiro, I do have a tax debt. I need help. Like, if I do this, can I actually pay this off? And I say, well, you tell me. If you change your strategy, if you're doing upwards of 2.5K per day per truck, will that be putting you in a better position than you are now, or in a worse off position? Pretty self-explanatory. If you're doing between $40,000 and $70,000 a month with our model, would you be worse off or better off? And some people, that might scare them. They might be like, oh my God, I don't know. I just can't do it. Guys, chip away at it. You don't have to hit $40,000 to $70,000 a month the first month of joining up. No, you can chip away at it. And I won't mention the company name, but there's a beautiful family-owned business, and they have came to us with a really big tax debt, and they were actually working with another coach. And they have now said they have never seen so much money in their account. They've never had such high profits, and they are going, because they were planning on just paying off the tax debt here and there in dribs and drabs on a payment plan with the ATO. And they go, Spiro, we're just going to finish it. We're going to finish it, close it off, and we're going to keep crushing it. Like, it's amazing. And if you're listening in, I really love those messages. I really love the emails, love the phone calls of people's lives getting changed because they've changed their business, which has given them now more options. The reason why I'm so passionate about this topic with ATO debt is because I am shocked with how many solo operators have tax debt. If you've got a tax debt as a solo operator, and there is a lot out there, I know. So I'm going to piss off probably 50% or 90% of the audience right now. But I need you to hear this. You have failed before you've even begun. Again, do you have a failing business or a thriving business? We need to turn that failed business into a thriving business. And it's not going to happen by fluking it or by accident. Nothing you do in business is to be done by accident. It's got to have a motive behind it and a plan in place. Super, super important. And that's what we help with here. So, because think of it like this. If you do have a tax debt and you want to go buy properties and do stuff, do you think the bank will want to give you finance if you've got a tax debt? Do you think the bank will want to give you finance if you don't have predictable leads, predictable sales, predictable profits? What are your thoughts? Do you honestly think, would you lend yourself money if you had an ATO debt? If you knew your mate had an ATO debt, had a failing business, would you lend that mate of yours money to go buy a house? Just food for thought. So yes, it is pretty brutal, but I got to be brutal because I need people to actually listen and get a grip of it because I'm sick of hearing. Now, if you've got cash flow problems and ATO debt, it's about to get a hell of a lot worse. Yes, you heard me. It's going to get a hell of a lot worse. Why? Because this just got passed through Parliament, which is more pressure on small business, which is from July 1st of 2026, same pay super is getting introduced. Which means, as you pay your employees every week, you also need to pay their super weekly now. Prior to this legislation, it was every month or quarterly you would pay your super. Now they're doing it, the same pay slip will be, your super will be getting taken out and the pay. And the reason why the government have introduced that legislation is because they expect $3.5 billion worth of super contributions are missing from employers that are unable to make their super payments. The amount of super and poor employees that unfortunately miss out because of working for business owners that haven't been trained business. I'll say it again. The amount of employees that have missed out on super because of their employers not paying for them is a massive, massive issue. And the government expects $3.5 billion worth of super is missing. So getting those payments in is going to be super, super important. super important to get your super payments paid on time. That sounds a bit funny, but yeah, that's what it's going to be. So, and then I just want to do a real quick common mistakes that I see because I'm sick of people coming to us with ATO debt. If that is you, we will help you. It's my duty to help you, yes. But I want to try to prevent it from happening so we're not having that conversation. It doesn't get that bad. So common mistakes I see is people have the same account for business and personal. Other things I see is people are running their business through their offset account. Is that allowed? Yes or no? No. Do that. It will be treated as a Div 7A loan or as a maximum contribution. So you have to pay 47 cents on the dollar if that is, what it is. Buying dinners, groceries with the company card and be, oh yeah, the company's paying. That is not killing it in business. That is not how you get ahead in business. And that is not a tax hack. That is not allowed. And it's one thing you saying it to your mates, but another thing actually saying it to the ATO that why that was a legitimate business outing. You know, at the end of the day, and look, another one is like buying C63s, you know, Range Rovers and buying sports cars through the company. Cool. You cannot do that legally. Yeah, sure. You can do it. You can, but when it comes to explaining to the ATO, when they knock on your doorstep and say, so tell me, you're an electrician, why do you need a C63? Oh, I've got it as a quote car. It's a quote car. Good luck explaining to the ATO that you need a C63 as a quote car. Okay, so you can do everything until you get caught, until you have to explain to them and justify to them as to why it's for 100% business use. So guys, get smart. Doing things for cash, why I'm against it and why it's not allowed, of course, you got to declare all your income, is because of leverage. You got to show the banks that you do have a profitable business. You have to show the banks that you know what you're doing. And in order to actually build wealth, you need predictable income each and every month. And if you don't have that, let's get your business fixed up and then start crushing your wealth journey. So that's the steps, guys. Fix your business, fix your income, and then start look at investing in other stuff. So, and any questions, feel free to reach out anytime. Always happy to help out. Cheers.